Shriram Transport Finance is banking on demand from rural India for its growth. The non-banking finance company is also confident of achieving a 20% AUM growth in FY20. To discuss the company's strong outlook, we are joined by Umesh Revankar. He's the Managing Director and CEO at Shriram Transport Finance, joins us right now on the show. Mr. Revankar, good having you. Thanks so much for joining in. I'm guessing now people can't ask you about how difficult it is to raise funds because there are alternate modes that have opened up.
Yeah, the alternative modes have been there for last 2 years. It is not a just new one because the masala bond was available. And the ECB simplification of the rule is another advantage now. So we could launch our bond issue. So I think even the public issue is still open for everyone. In retail public issue also is open to everyone. So there are multi options to raise resources. Only thing is the cost of funds when that's one thing which we need to balance between all different sources to be what to call price it properly.
Now this so this amount of money that you raised, I think about nearly $400 million, if I'm not wrong, via that dollar bond sale, does it is that a window that you think companies like yours could tap more often? And does this put you in good stead for the kind of liquidity you needed for the business for the next few months?
Definitely, yes. See, there is a window of automatic route up to $750 million in a year, financial year, which we can raise. We can even request, we can go for approval for in case we want to raise more than $750 million in a year. And as you become well known and as your company story is well known across the other countries, then you can go for lower price over the period. So because you need to create a good secondary market. Once the secondary market is good, then automatically the application will be much stronger in the coming year. So I feel that by going offshore, we have created a market and it will help us over the period to bring down overall cost.
Right. So what has been the cost of raising this money? If you could highlight that for us, and how has it changed if you were to raise a similar amount maybe last August before the crisis?
See, I can only give you a comparison. We have done ECB loan in August for $350 million. And this is a bond. This is for 3 years and that's for 5 years. So the difference is one is a bond and another one is a loan, and 3 and 5, there's the basic difference. I think the cost has gone up by around 60-70 basis points between two. So that is the difference. But however, the cost is not most important here. What is important is opening a new avenue and diversification of your source. That is important. So you have to go explore and build market. Then over the period, you can bring down the cost. So for us, since we have a pricing power, we are able to pass it on to our customer. We don't really, a 20-30 basis point cost difference will not make a big difference for us.
Okay, that's probably was what most of the financiers have been saying, is even though the cost of finance has gone up, they're in a decent position to pass that on to consumers. Let's focus on the business side of things now that you've already spoken to us about the funds that you've raised. What is the AUM growth target now that we're going to be seeing? Approximately 14% is what you've done so far this year. Are you going to up that, maybe take it northwards of 18, 19 odd percent? Because your disbursements so far have come off a bit. So do you see that picking up meaningfully?
No, this year, yes, we may be in the range of around 14, 15. And yes, the demand is slowly picking up. February has been much better, but November, December, January has been a little lower than the expectation, mainly because of real estate market being slow. The bulk movement, or like cement, steel, etc., has slowed down. And now in February, what we see is infrastructure activities are going up, that government spend is going up. So that is really boosting the demand. So I think March should be good. So we should end up this year at around 14, 15. But going forward next year, we are quite bullish because of a change in technology from Bharat Stage 4 to Bharat Stage 6.
Interesting. Actually, just one question, one related question and final question from mine, Mr. Revankar. Most of the street believes that this transition to BS6 will see significant amount of pre-buying from July till December. Is it as simple and as black and white, or do you think it's unpredictable?
Yeah, it's predictable because the cost, the general expectation is that cost is likely to go up by 10 to 15%, and some even say 20%. If that is the kind of cost increase, many of the buyers, they would try to buy the vehicle at least a few months before the March 31st. So I think there will be strong demand from October to March for buying new vehicle. And it depends upon the economic condition also at that time. If economic condition is good, especially if the new government is coming, a lot of activities, and people see a long-term good benefit, people would take a bet and they will try to prepone their buying. So I feel there will be very strong demand in the second half of the next financial year.